My name is Dr. Kalpana. I'm Associate Professor of Law. It's been more than 18 years of teaching experience. And here I would like to throw some light on the conceptual understanding of banking law. Introduction to banking law is the topic of the day. And this presentation will provide you an overview of banking law in India. And it would cover definitional clause and classification and structure of banking system in India. So let's begin with the basic, what is the banking, what we call as bank. So banking involved accepting deposit from public for lending or investment, repayable on demand or otherwise, and withdrawable by check, draft, order, or otherwise. Now, question is what is otherwise? There might be many other instruments which can be introduced by banks to uh, transfer, transit that money. So, primary function of bank is a company under the definition of Indian Company Act. You need to understand first this thing, and it is a legal entity like any other company, but because of its function of deposits and lending, it is called banking company. So banking company is any company that transacts the business of banking in India or any other country. So banking is a global sort of thing, but here we are primarily concerned with banking law in India. So let's begin with how many types and classification of banking, because banking sector has developed in leaps and bounds after following and adapting the policy of liberalization in 1992 by Manmohan Singh efforts. So classification of banks, central bank, we can interchangeably can call it Reserve Bank of India is known is its name, but it is the Central Bank of India, and it is the head of all other commercial banks, scheduled bank, cooperative banks, and the second category of banks is commercial banks. Here we need to understand what is the meaning of commercial. So commercial means any bank who is offering services and financial products to earn profit out of it. So that purpose makes them commercial in nature. So earning profit out of any transaction is called commercial. So operate for commercial purposes, offering services to earn profit. That's why we call them commercial bank. It includes public sector banks as well as private sector banks. Specialized bank is a third category and classification of banking in India. So here focus on specific sector such as agriculture, infrastructure. For example, NABARD is focusing especially priority lending sectors in India, which would be we would be discussing in further lectures. So here cooperative banks owned and operated by members, typically serving rural communities for the purpose of extending loan facilities to farmers, small scale industries, and where profit margins are less. So cooperative banks are open for that. So types of banks in India are enumerated under Banking Regulation Act 1949. So just have a look briefly how many types of banks are recognized under banking law and under Banking Regulation Act 1949. So first is RBI, Reserve Bank of India, that is also called as Central Bank of India, regulating other banks. So Reserve Bank of India is not aimed at earning profit. So it is not a commercial bank, though it may earn profit, but RBI's primary objective is it is a banker to other banks. So it regulates, heads the functions of other banks in this country. Exim Bank is those bank which are especially focused Export Import Bank of India. It is called Export Import Bank of India. Reconstruction Bank, Industrial Reconstruction Bank of India is called Reconstruction Bank. National Housing Bank focuses on housing finance because house being the second need of humans after food. So focusing on the functions of finance of to the home buyers. So how national housing banks are primarily focused the objective to housing finance. National Bank, that is called NABARD also, National Bank of Agriculture and Rural Development, as its name has its meaning and significance of introducing this bank, focusing on agriculture because it is the cause lying in the history of our country. When India got independent, we had a food crisis because we faced partition. We faced two wars, one war with China, another war with Pakistan. So, and famine also altogether, coupled the misery of food crisis. So these banks were opened to cater the need of to the agriculture and rural development. So we had a green revolution as an outcome of National Bank. National Bank for financing infrastructure and development, focusing on infrastructure financing. You know what is infrastructure development. In the last 20 years, we have seen the revolution in infrastructure development in our country. Regional rural banks, RRB, we can call it in short. So several RRBs, often in partnership with commercial banks, are open in this country. We would be discussing this in detail in further lectures. A small industry bank, as we know, small scale industries faced tough times during British rule. So small scale industries were requiring immediate attention to be taken care. So these banks were open to support the small scale industry finance in this country. A sponsor bank is defined in Regional Rural Bank under Section 1976. Subsidiary bank is defined in State Bank of India Subsidiary Bank Act 1959. So now coming, what kind of structure we do have so far as banking system in India is concerned. So first, top of the structure, Reserve Bank of India is there as Apex Bank or topmost bank, which is the head of all banks, we can call it. Commercial banks are those banks which are nationalized, as well as we do have public sector banks and private sector banks, which are running the business of banking in this country to earn profit out of their services and financial products. Specialized bank focus on specific sectors, as we have discussed, like national banks are focusing on agricultural and rural development. National Housing Finance Bank are also a specialized bank example who are focusing on housing finance. And cooperative banks owned and operated by its members, and purposely you would find those banks existence in rural areas, not much having their presence in metro cities like Delhi, Bombay, Madras, etc. Commercial banks are of two kinds, which is interesting to know and important also for us. Commercial banks, scheduled commercial banks, you can call it SCB, non-scheduled commercial banks, NSCB. So included in second schedule of Reserve Bank of India Act 1934, which are listed, and it has some criteria which banks are required to fulfill certain conditions which are enumerated under Reserve Bank of India Act to be listed under that schedule. Non-scheduled bank do not meet the criteria to be included in second schedule of RBI Act. Scheduled commercial banks eligibility for loans at bank rate from RBI, automatic membership of clearing house. I would be discussing what is clearing house is a body which is a agent for some transaction for clearing up public sector banks, private sector banks, foreign banks, regional rural banks, scheduled payments bank, scheduled small finance banks, and scheduled cooperative banks are the types of scheduled commercial banks which are scheduled in second schedule of RBI Act. Non-scheduled banks are also commercial bank, but they do not find its place under second schedule of Reserve Bank of India, operate under a different set of regulation than scheduled commercial banks. While scheduled commercial banks are required to maintain certain reserve ratios, meet other prudential norms set by central banking authority, non-scheduled commercial banks are subject to more relaxed regulatory framework, whereas scheduled banks are having uh, stringent provisions to follow as provided under Reserve Bank of India Act 1934. So primary distinction between two types of bank lies in their classification and criteria used to define them. Scheduled commercial banks are those banks that are included in second schedule of Reserve Bank of India Act are subject to RBI's oversight and regulations. In contrast, non-commercial, non-scheduled commercial banks are those do not meet the criteria for inclusion in second schedule, therefore not subject to the same level of regulatory scrutiny. So differences in the regulatory environment can have implication for operations, risk profile, overall performance of non-scheduled commercial bank compared to their scheduled counterparts. Understanding these distinctions is crucial for stakeholders, policymakers, and any interested in the dynamics of banking sector. So here we are ending as introduction of banking law in India. Uh, uh, Today we have introduced its structure, its classification, its types, and its basic concept. I believe you would be able to understand what kind of banking structure we do have in India and under which law. The primary law is RBI Act 1934 and second is Banking Regulation Act 1949, which we would be discussing in next lecture, the difference between scheduled commercial banks and non-scheduled commercial bank in detail. So thank you so much hearing this. And if you like the content, please do subscribe. And we would keep on uploading better content, coherent content for you. So see you next time. Thank you so much. Have a good day. Take care.